So I'm just going to start by thanking everybody, the panelists, as well as all the listeners for listening. I don't know, this is our fourth or fifth Twitter Spaces as a compliment to, our podcast and YouTube channel. I called this the Declaration of Lithium Independence. I have a proclivity for double entendres. And originally I was thinking that these would just be kind of independent analysts. And I wanted to get a collection of people who worked for major companies. So that was the kernel of this idea was if we can get Joe and Daniel as ex kind of FMC Livent and ex, SQM, and then have Ron Mitchell, who is ex Tangshi and Talazin, but also independents. We're not tied to, Fastmarkets or Benchmark. A lot of us are just the cottage industry here in lithium of, people just have been analyzing the industry for a long time and have used it to do other things. Like Ernie Ortiz has been in this space for a long time as an analyst, and Ron has joined as a company now. So I want this more to be an analytical thing than just like promoting let's say Global Lithium, the company, or Ernie Ortiz is now CEO, has been CEO, but it's now a public company, Lithium Royalty Corp. It's the end of the first half. And it's a good time. We just published a scoreboard with the first half activity. We all just came back from the Fastmarkets Conference in Las Vegas, which was better attended than any conference than any of us have ever been to. And we've all been going there for 5, 6, 7 or longer years. 1,100 people there, up from 650 last year, and which was up from a lot more, the prior year, which was during COVID. So I've asked each of them to kind of like come up with some questions. Rodney has come up with some, but I just want to kind of like set the stage and maybe my thought, or just it's my gut, but it's also supported by some analysis. And Ernie said the same thing to me before we spoke, that there's a seasonality to lithium equity performance at times, especially in a bullish market environment when prices of lithium are generally strong or rising. And that seasonality somewhat correlated to commodity lithium prices, because lithium prices often go up into the third and fourth quarter or into the new year, and then kind of slow around Chinese New Year, et cetera. So Ernie, we were speaking earlier. If you could just kind of one, introduce yourself, but also just give the commentary. We think the setup for a Q3, Q4 going into January should be very good for lithium equities. And there might be some summer, doldrums or sideways. You don't know, but like those who are paying attention over the course of the summer, it might just be a good time period to accumulate shares. As a reminder, though, nothing we're saying here is financial advice. We always have to say that, even though we're providing information, and this is very much an investor focused and Twitter Spaces. Everything here, just do your own research. These are only our opinions, but I do feel that, a number of us have kind of discussed, and we've had podcasts, when is the lithium price going to stop falling? And we had Matt Fernley on the podcast, I think in late March or April, thinking that it was about to bounce. It did bounce a lot, in a short period of time, and now it's kind of like floating a bit sideways. One takeaway that I had from the Fastmarkets Conference was a few people that I spoke to thought that Q4 going into Q1 should definitely be a period of rising prices again. And that's definitely a topic that I think we should all kind of like talk about here. But Ernie, why don't you just start quickly and talk about what you told me about like Pilbara and Allchem, just historically, in support of what I'm thinking here about the seasonality of equity returns.
Sure. Thanks, Howard. And hi, everyone. Ernie Ortiz, President and CEO of Lithium Royalty Corp. So we have 32 royalties diversified across the world. So as Howard mentioned, just talking about seasonality in the lithium sector, specifically on stock performance. We were analyzing just some of the key companies in the space. Q1 that we looked at was Allchem, given that they've been in the space for quite a long time. On average, obviously, every single year can have its particular skew and variations, but on average, every single month for the last 10 years has been a positive performance for Allchem. So to Howard's point, you have seen fairly good performance out of the key names in the lithium sector. Similarly, some of the best months in the last 10 years for SQM, the best 2 months for performance have been September and October. So you do see a bit of a second half bias as far as performance for these names. And even if you look at a name like Pilbara Minerals, similar as to Allchem, very big and strong performance in the second half of the year. And if we look at just the general kind of lit ETF, of course, some of the weightings there don't really represent the lithium sector as perhaps it could certainly be optimized. But if you look at the performance, I think their worst month tends to be in March with the best month in November. So I think looking at historically, you do see stocks in the lithium sector perform better in the second half of the year. I think that's also predicated on just a seasonality of demand, and curious to get everyone else's view on this. But even looking at the seasonality for electric vehicle sales, if you look at the last 3 years for BYD, roughly 30% of their sales have been in the first half of the year and 70% in the second half. So very big second half weighting for sales. And then similar with the broader EV industry in China, I think we're tracking that in the last 5 years, roughly about a third the demand has come in the first half of the year, and the 2/3 in the second half of the year. So very big back half weightings. That's why sometimes we don't like to run rate numbers from May or call it April, because these are very low demand numbers on a seasonality basis. So yeah, I think it's that stock performance is likely tied to just big second half of the years for electric vehicle sales. But yeah, I would love to see what everyone else thinks.
All right, thanks. The other thing, I don't have any real fundamental data to support, a correlation to kind of Tesla stock performance or news, but given the numbers, the blowout numbers that that they just announced, as well as BYD, and also years in which they launch a new product like Cybertruck. I follow a lot of the Tesla YouTubers and those who are very active on Twitter, and they have talked about, in years of new product launches, Tesla shares, typically do well. So I think lithium equities tend to follow if Tesla is performing well, sometimes with a lag. And in years in which they launch new products, that should be good. So the Cybertruck launch, which is meant to be before the end of this year, could be a further catalyst on top of the blowout sales from both Tesla and BYD. Okay, so thanks for that, Ernie. What I want to do is, maybe go through for all of you, and we could start with Ron Mitchell of Global Lithium. Just, what were your key takeaways from the Fastmarkets Conference and your recent marketing, not for Global Lithium specifically, but just more broadly industry-wise?
Yeah, sure, Howard. Firstly, good morning, good evening to everyone. Well, first and foremost, that is the 11th event I've attended, and by far and away the most heavily attended event, and with a really, really good spread of, not only investors. There was a lot of quite sophisticated institutional funds there, but obviously Japan Inc., Korea Inc., China, Europe, a lot of Australians, and of course a lot of North Americans. So in terms of geographical diversification, probably the best attended event I've attended. The key takeaways really, first and foremost, I think a general consensus now that developing new projects is going to take longer. I've been saying this publicly for an extended period of time. I think permitting and approvals is an enormous challenge for the sector. I think it's only going to continue, and that's multiple jurisdictions. Even those jurisdictions that I think have had incredible performance in recent times are going to be challenged going forward. So, and it's not just permitting approvals for project proppers, so mines and processing or beneficiation facilities. It's also the actual infrastructure itself, the roads and rail networks to get products to market. So that's a bit of a bottleneck I see being challenged. I think most companies now have acknowledged that and are sort of really ramping up their approvals team. From a demand perspective, probably another key takeaway is, yes, EV diversification is growing, but the big one was energy storage, and that's a market I've always thought had potential, but certainly a market that I think is going to grow a lot stronger than what a lot of people had anticipated, and certainly probably something I need my analysts to look at a lot more sharper going forward. But look, the mood in the room and all the meetings, and it was a bit like speed dating 101 for most companies. Certainly anyone with a lithium project would have felt the same. A lot of desperation out there by the end users, a genuine concern, and a genuine, I think, recognition that, the days of the past whereby lithium juniors would just take all the risk in terms of developing assets, well, that clearly hasn't worked. There's been a handful of projects that have been able to get through development into production, but very few on a global perspective. So I think a recognition within the supply chain that they need to step up and assist in terms of de-risking from a financial perspective. So they're probably the key ones for me, Howard.
Okay, great. Thank you. Joe Lowry, what were your main takeaways?
Well, I really would distill it down to kind of a gold rush atmosphere. It was the first time I'd ever gone to that conference where there were more people I didn't recognize than I recognized. I think there's more myths out there about lithium than ever, which is unfortunate. But, I think lithium is making the transition from bit player to mainstream gradually. And I think that's just some of the growing pains you go through. I spent most of my time in meetings. I wasn't in the hall a lot, but I think from some of the more important players, what I was hearing is there is an optimism about price that wasn't there when I was at BMO in March.
Okay, great. Daniel?
Yeah, in general, not too many things to add. But maybe to point out that true that we started to see a lot of new faces, and particularly speaking, for example, of oil and gas. They were there. They were not as quiet as they used to be. Bankers, there was a big crew of different investment banks at the conference, which was, to my memory, it was the first time I saw so many. Also noticeable, and especially if I look back in time, how many Australians were there. This used not to, in the past, this was not the case, talking 6-8 years ago. So Australia is really taking over the lithium world, and this is evidence because of the amount of production we have got in Australia today and what is coming. I would also say, yes, there's a general atmosphere of optimism on lithium projects, lithium producers, of concern on the side of suppliers. And by the way, OEMs, there were also plenty of OEMs there, which is also, they're starting to attend all these conferences, but this time they were also very active. So, yes, optimism on lithium outlook from suppliers and projects, certain concerns and on consumers' side. So, yeah, a different atmosphere from what we have seen in the past, and amazing amount of people.
How long have you been going to this conference, Daniel?
What is this? 13 years now?
13 years. Okay, great. And Rodney, you shared some thoughts by video and on LinkedIn, but for those who may not have seen that, do you want to just summarize that and add anything more?
Sure. So, a lot of the points I'd reiterate, but the ones that stand out is probably the first one is, Brazil's lithium star is definitely rising. I think that there are some interesting and potentially large deposits following on from Sigma. The one thing that's interesting is you keep hearing from the incumbents and from the guys co-hosting here is what is the depth of lithium skills in the industry? How much is there to go around? And yet we seem to have a mass oversupply of new lithium companies. So each investor's got to work out for themselves what they need to look out for. But I'd say I no longer agree with the mantra, everything's got to get built. I think that a lot of new companies have popped up, and I think less than 25% of the exploration companies on our RK Equity Scoreboard will be developed because there aren't the skills. They're not going to get the permitting. And quite frankly, mediocre deposits are popping up. People are just pegging, and neurology has become a high science in lithium. So I think there are going to be disappointments. There are, of course, going to be great successes, but unless something has all of the characteristics that attract either an existing incumbent or a new player coming into the market, there's a fairly high chance that it'll get overlooked and it'll struggle to find the skills and the money to get built. And then I'd say lastly, Ron touched on it briefly, the ESS. I put in my post, I'm going to stick my neck out and say a terawatt hour by 2030 or sooner. I'm hearing of triple-digit gigawatt hour projects in China that are going below the radar. And I think that as EVs can take so much of the capacity that's running ahead, I think the ESS will take up quite a lot of the slack, and it's becoming a market on its own with its own specific cell chains, and like we discussed with Iola from Row Motion. So I think that market is going to be way ahead of what people are forecasting, and there will be hopefully the capacity to fill that. But I don't know what the split will be between sodium-ion and lithium-ion in that market, but I think LFP lithium-ion is going to have a big share. And if we don't have to forecast out to mid-2030s or 2040, because some of us won't even be around anymore, but certainly to 2030, I think that lithium-ion will dominate, and that's going to be a meaningful demand component in the industry.
Okay, great. I'll just add some of my takeaways. I presented there, which was, and I used that as a bit of a retrospective because it was the 15th anniversary of this conference. So I kind of broke down. We're in Lithium 3.0. The cycles. We had the boom period from like the initial one from 2009 to 2012, then a bust, and then we had 2016 to 2018. And now, kind of since Battery Day, we've been in Lithium 3.0, and the scoreboard has grown enormously. I remember Lithium 2.0, the Kidmans of the world, the Alturas and Pilbara, and the ups and downs there. It was much more manageable to kind of keep track of what was out there. But now, you mentioned, Daniel, there was a lot of Australians there. Yes, that's because the Australians are producing, but there's also a ton of Australians who are, pegging ground in Canada. And there were some site visits. I think there was a Lithium America site visit, but there were some other visits after the conference, I think, to North American Lithium and a few others. So a lot of travel after the conference as a result of that. But on the scoreboard, there's been, so we say that there, within the structural shortage of lithium, which we all agree, there are no bears among the people here. So we are all biased. I do want to talk a little bit about some of those who are bearish out there and kind of what their thesis are and why we disagree. But within that structural deficit, there is an oversupply of lithium investment opportunities. So you can't just throw a dart at the RK equity scoreboard anymore and just think that everything is going to go up. And that probably wasn't true even a few years ago. But it's very much a stock picker's market. But if you look at the performance of what's rising, and hard rock is moving its way up a lot compared to other types, brine, DLE. I break things down into four categories: as hard rock, conventional brine, and then there's alternative brine, which need a DLE, and then there's clay. And the hard rock stories and the Brazil names that you mentioned, so Latin Resources have risen a lot, Atlas has risen a lot, given the shine, on Sigma. And you've also had, Sigma's obviously for sale, but Liontown has received a very big bid from Albemarle. But even in a smaller way, Albemarle just bought for $30 million from Lithium Power, a project. They spent $40 million on a drive-in movie theater in Carolina, but also SQM has made an investment in Azure Minerals, so you're seeing even the incumbents have largely been focused on, on hard rock, and it's reflective kind of like on the, on the scoreboard here. Ernie, we were talking about the makeup of your 32 royalties. Those down, do you have any How are those broken down in those four categories that I just discussed?
Yeah, I'd say the vast majority of our royalties are on hard rock spodumene projects. We have 2 brines, 2 clays, 1 non-lithium royalty in the silica quartz space to play the silicon metal and semiconductor and silicon metal angle. But overall, I would say the vast majority of our exposure is to hard rock. And speaking to kind of your scoreboard, and we were talking earlier, we have seen that hard rock names have outperformed this year, and I think we've seen that the market has been rewarding names that can really speak to scale, whether that's strike length, width, depth, or so forth. I think in some ways Patriot has been a good example of how now investors want to see very strong widths for prospective projects. But to your point on performance, looking at some of the key kind of hard rock projects, like Latin's up 250% this year, Azur's up 500%, Delta Lithium's up 93%, Atlas is up 200%, and all of these projects have shown the ability to have scale and have very large widths. I mean, Azure has the 100-meter width potential, as well as the SQM partnership. Unithera has had widths of over 50 meters and with lots of strike length on the horizon. Another key kind of performance attribute that we've noticed is that the ASX, while it's more volatile, ASX listed names tend to have a better valuation compared to other listed exchanges, whether it's the TSX or in the UK or Europe and so forth. So I think, I guess, piggybacking on our comment about many Australians at the Fastmarkets Conference, I would say it's also given kind of that they're the largest, I guess, feedstock producer in the world. It does seem that they're also a bit of ahead of the curve as far as understanding and analyzing these types of opportunities, because there is a premium to some ASX listed names, especially the ones that can show that they can have scale and very strong strike lengths and widths.
Okay, like I've noticed every 6 months or every 12 months or so within the lithium space, there are micro narratives or narratives within the lithium. Like, so DLE stories were hot for, I don't know, a couple of years. It kind of came out of nowhere. Clay was very hot, post Battery Day, following Elon Musk's comment. Lithium America's clay opportunity was hot. I don't know that it's ever really translated to some of the other clay names or sediment names. So do we see a continuation of this hard rock theme, or, there was a lot of activity in Australian brine M&A not that long ago, right? So you had Ganfeng, made a big acquisition. Rio made a big acquisition. Lithium Americas, and there's one other one I'm forgetting. Is there an opportunity? Are Argentine brine, or DLE plays, oversold at this point? I know, Daniel, you're on the board of Galan, and Rodney and I, have a good relationship with JP as well, and we think that stock is not fully appreciated, but it does seem that there's been a bit of a shift, and might that change? Might we all be talking enthusiastically about Argentina, and conventional brines or DLE brines? Is now a good time to pick up, Vulcan or Lake?
Yeah, I think brine has to perform before you see a big change. And, people are watching what happens with Cauchari. I mean, Argentina's been dead in the water for 5 years production-wise, so I think you got to see a real change in that, and it's going to take some time. And the DLE stories, just about everybody that's looking at it has to build a demo plant from pilot to demo to commercial. So DLE is probably, it depends on what your time horizon is, but DLE is going to take a while. And I was fortunate enough to go to Australia last November, and I picked up Red Dirt, now Delta, Azure, Patriot, and Latin when I was there, just based on traveling around with those guys, the different things I spoke at. And I don't know. I think it's probably for a while still hard rock's day.
Hard rock has a beauty that it is a rock, a mine that doesn't move. and that makes from a process point of view hard rock easier to predict, easier to control. Brines are slightly more complex, and therefore the know-how of how to operate, how to control and predict what is going to be fed into the concentration is a big challenge. It is true that not significant new projects on the brine in the brine space have appeared lately, but we are going to see now a wave of projects coming online in Argentina. Some of them will work nicely, some will have troubles, but at the end of the day, brines are low cost. That is a very important element also to consider. So it will be a space in which clearly hard rock is going to dominate. Hard rock resources are more abundant, are more easy to develop. And brines will have a limitation in terms of the amount of salt which are out there. There are not so many salt lakes available to be developed at this. So, therefore, the scale of brine production is probably limited to salt lakes with day a day, and it's there's less of would be any big brine resource. Argentina, Chile, Bolivia are very in their development, and in the case of Bolivia, relying on DLE, which need to be proved themselves yet.
Well, Daniel, you guys at Galan are the hard rock of brine, though. I mean, liquid spodumene is a great concept. So there's more than one way to skin the cat.
Absolutely, and Argentina will have in the next 5-6 years probably around 10 projects operating, all of them concentrating lithium in the form of lithium chloride, and then refining it into lithium carbonate or converting it into lithium carbonate. So at Galan, yes, our bet there is that we are going to produce lithium chloride concentrate, highly concentrated, higher than the rest of the Argentinian projects have. And that's a product which can be shipped all over the world. We did it at SQM for years. For 10 years, we did ship lithium chloride concentrates to China at a very convenient conditions. And that's what we are betting that we'll be able to replicate with Galan to get our lithium chloride sold within the existing pool of projects which are there in Argentina, or alternatively to get it toll produced into lithium carbonate. It's a concept in which we think there will be idle capacity to convert, and therefore the opportunity will be there. And the fact that idle capacity will be there to convert is because concentrating brine is a big challenge. It's difficult. It's not easy. And we have seen in the past. This Orocobre was a good example of that. And we'll probably see very similar situations with new projects coming up.
Okay, great. There's a lot of projects that Joe, I saw your presentation, I think I don't know if it was in November or some other time, the Tribeca one, where you put up a slide of all the projects in Argentina, and there's, I don't know, there's like 50, right? And some of these have like significant backers, like, Aramet, or actually Aramet partnered with the Chinese, but now they're asking for Glencore to help finance it as well. That was a little bit, I thought that was a little bit unusual. Rio is obviously making some investments there. Is there any, like, do you see in the second half of this decade that all of these projects collectively will there be some sort of like very significant increase in supply as a result of all of these groups, or is it really just some will work, some won't, and we shouldn't really worry about that from a very significant kind of game-changing amount of supply coming from some of these bigger players that are coming in and financing the projects?
I think it's just both. I think some work, some don't, but I think there will be significant supply. It's just taking longer than, in 2016, I was talking about Argentina, catching up with Chile sooner rather than later. I still think they will. I just think I was wrong on the timing. So, I think it's, as Daniel said, it's just quicker to bring hard rock on. But ultimately, anybody in the brine business is going to have a lower cost than the average hard rock. That is an unassailable fact. Only Greenbushes beats the garden variety brine project in hydroxide, and they still don't beat any of them in carbonate. So, when DLE comes in, the cost structure is going to be different. I'm talking about conventional pond brine right now. And then we'll see what happens with DLE. But just hearkening back to the Fastmarkets Conference, though, I had 4 people come up to me I had never met that said they had smackover projects. And I'm not talking about Exxon and Standard, and these were newbies. And that's why it just seemed like the gold rush to me that, all that's predicated on working DLE.
Right. I want to, there's all sorts of stuff we can kind of talk about. And that's one. But like Bolivia has been in the news with some major announcements from Chinese investments, and then Ernie flagged this like Imerys and British Lithium. I think a few months ago there was another Imerys project, or maybe it was an Aramet project, I forget. Just like out of nowhere, someone announced, a big resource. It's still at piloting stage, so this is still going to be many years in the future. But just like there's a fair bit happening, like let's say in the private space that they're not ASX listed or TSX listed, and Ernie, you're the one who flagged for me this like Imerys British Lithium, and you're tracking pretty much every project everywhere. Like you're the one investor, one institutional investor, on this. So you're probably shown every opportunity. What's your sense of these, let's say unconventional projects or projects that are a bit off of our radar that, maybe something that we're going to need to worry about? And also, what are your thoughts on what's happening in Bolivia? Because everyone knows there's a ton of lithium in Bolivia, and the magnesium problem is not necessarily such a problem based on advancements in kind of DLE technology. So what do you think on, the off the public market radar, projects?
Yeah, sure. So I second kind of Joe's comments about a bit of a gold rush and seeing new entrants in the space. I think Imerys is a good example. Develop Global recently with Essential Metals is another good example. But yeah, I think on Imerys, they're I think a $3 billion company listed in France, mostly in the ceramic space. I think that's their key kind of bread and butter. And they just acquired a portion of the British lithium asset in the UK, but it is on the lower grade side. So I think it's 160 million ton mineral resource at 0.54% lithium oxide. So and they do admit that it requires some kind of bespoke new technology to process it. It is a lithium mica. So it's not a traditional spodumene hard rock project. So I guess we are tracking these, and I think we're of the view that these projects and technologies are going to take a very long time. If hard rock is easier to ramp up, it can still be difficult. And second that with brine and these certainly new technologies that they're trying to get into lithium hydroxide and lithium carbonate, I think it's going to be hard to kind of meet the specifications, especially operating in Western Europe. I think we've all seen what's happened with Savannah. I guess they progressed it more recently, but it took them over 5 to 6 years to get an operating permit. So it does take a significantly longer period of time in certain jurisdictions. That's why we focused on areas like Australia, Brazil, Canada, which it can be a lot faster to get things done. So I think we're of the view that there's still a lot of work to be done and technologies to prove for these to work. So we're just monitoring it for now. We're still going to be investing in our traditional hard rock space. And as far as Bolivia, I'd probably defer to Daniel, as he's probably a lot more closer to it. But yeah, I think on Bolivia, I think similar to what I just said, and I think the rule of law is a big concern for us, especially as a royalty investor. We like to have royalties registered on title, perpetual investment. So I think we're focused predominantly on OECD countries. The biggest investments have been in Canada, Australia, and so forth. So from a rule of law standpoint, we like to stay closer to home. And some of the deposits in Bolivia, as you said, their impurity profile is not as robust as, say, some things in Argentina or in Chile. So I think for now on the brine side, we'll likely limit our investments to Argentina.
Daniel, you want to say anything, or Joe, about the recent announcements in Bolivia?
Yeah, my first week in the industry was November 1990, and I was working for what is now Livent. They had just gotten run out of Bolivia, basically. They had tried to do a deal there, and they kept changing the tax laws. And if you go back, you can every era from 1990 on, Bolivia has talked. And yes, you can't be always mired in the past, but I don't think this time it's going to be much different, except for the prices there to help prop them up. But I think it's a tough go. I think it's still a tough brine. I think it's a huge but non-homogeneous resource that has processing difficulties. You have the infrastructure and you have the politics. So I think in 2030, Bolivia is producing 20,000 tons max.
Yeah, I do agree with Joe in general. I think Bolivia's main problem is that there's not a consensus politically with indigenous communities of how lithium resources need to be managed, how the profits are going to be split. And the risk is always that with the change of government, policies change, and therefore the risk of investing in Bolivia is high. If you get it ever moving. Now, we see significant amount of Chinese investment there. Maybe Chinese companies can maneuver in a better way. They will certainly also be supported by the embassy of China in Bolivia. At a political level, the influence China can exercise on a country like Bolivia. And for that sake, also any South American country is big because of the amount of natural resources, the raw materials they buy from these countries. So, but yet it will be difficult for Bolivia to exploit. The other area, going back to what we talked earlier, which is interesting to follow, and I had a very enlightening conversation with Rodney in Las Vegas, was Africa. Africa, to me, is the biggest, sort of say, uncertainty, because basically we know we don't know. It's Chinese companies which are active there to a great extent. If I would have to put bets on where more volume is going to come from, unforeseen volume is going to come from, it is Africa. Rodney put that down in Las Vegas, but maybe it's interesting, Rodney, for you to share that view as well.
Yeah, I think Daniel and I had a good conversation, and it's interesting listening to Joe and Daniel on Bolivia. In my experience, in certain countries in Africa, I won't paint them all, is they'll let you come in and take the risk, and then if it works out, they'll move the goalposts on return and implement super taxes and so on. And if it doesn't work out, it's for your account. So it's it can be a tough environment to work on. And then, like you're seeing now, the requirement to beneficiate in country when somewhere like Zimbabwe, used to get its power from South Africa, and South Africa is in heavy load shedding. So Zimbabwe is often without power for, I'm told, can be as much as 18 plus hours a day. So that's a big ask to make that requirement. So again, resources are there. The question is, I guess, and maybe Ron can comment on this, is if we are seeing so many new lithium companies and so many new hard rock, will the world, necessarily be reliant on tougher jurisdictions? There could be politics, I guess. China might be, but if you're finding it all over and, it's available, will challenging political and infrastructure challenged countries, be producers, be as required in the future as, they are probably now? Ron?
Yeah, Rodney. I mean, that's a really, really good point. And I guess what a lot of the sell-side analysts are missing is, and you mentioned it, they were the infrastructure. There's a lot of projects here, and time is of the essence. Speed to market is of the absolute essence. And whilst I acknowledge with the high pricing environment we've experienced over the last sort of couple of years, there's been a lot of new discoveries, a lot of flag flying. But in my honest opinion, I think Joe mentioned this earlier, very few of these projects are actually going to come into development. Now, whether that's because of grade or other technical metallurgical challenges around the specific ore body, but most importantly is the infrastructure piece. I mean, to build a new road or a rail line, to be able to get, we're talking in the case of spodumene concentrate, significant movement of tons to extract the lithium units. It's a massive challenge, and one that I think, honestly speaking, the market is probably underestimated. I know through my own experience going through the permitting and approvals process in Western Australia, and where we've got it pretty good as far as having a well-governed, technically sound process in terms of approvals, it still takes time. Now, you roll out these challenges in some of the other jurisdictions where there has been discoveries. I'm just not as bullish on the supply side. And whilst, yes, there are a lot of projects out there, in my view, the delay in getting these projects to market is going to be the overarching challenge for this industry and this sector, and ultimately for electrification. So it's going to take a collective effort. I think governments are going to need to intervene at some point. They can't just allow companies to go it alone like they have in so many jurisdictions. I think that intervention piece is going to be critical, and I'd like to hear from some of the other panelists on how they consider how government can play a role, because this is an energy transition, and the last major energy transition we experienced was more than 2 generations ago. Now, these things take decades to play out, so whilst it's still early stages, government needs to provide a runway in which companies can invest with confidence.
I'll chime in. I mean, the U.S. is, under Biden, has made major moves. There's a very good piece in the Wall Street Journal, which I read yesterday. I was planning to tweet about Jigar Shah and how he had $400 billion, that's being deployed, some of which to, our sector. But there's risk. There's, Solyndra PTSD. And we're going to have an election, next year. So we'll see how that goes. But I mean, he's focused on climate, but some of the investments that he's making, he recognizes there's geopolitical, consideration on, in our sector, but he doesn't have a mandate, to implement things purely from a geopolitical point of view, right? It's still a climate focused lending program. So, but I've been optimistic. I've been watching U.S. politics for this for a long time, and under Trump, there were some things, moves made, Simon Moore is a benchmark, et cetera, speaking in front of committees, et cetera. So there has been a whole of government kind of approach, but like Biden's Inflation Reduction Act and the bipartisan infrastructure law, which we've done a bunch of videos about, have really kind of kickstarted it. And I don't know. Next year is an election year. Going back to our thought that like Q3, Q4 into Q1, could be a good time for lithium equities. I think that's right, but it's going to be after that. There could be some U.S. political volatility as a result of the election year, like depending on what's said. I think it's not reversible, the trend toward EVs, but the fire and support that's been given by the U.S. government to this may be less, in time. Canada seems to be following. I'm not following it super detailed. Again, Ernie, you may have some thoughts there. And Europe, speaks a lot, but they haven't shown a lot of money. Although I think a graphite project just got like an EIB loan. So I think there is government does need to support and is in fits and starts, but it's bipartisan, the fear of reliance on China, and where, but they don't like mining. So, like, are Americans going to finance stuff in Africa? Maybe selectively. In other places, maybe selectively. Ernie, you have any further thoughts on that from a kind of U.S. or Canada government supports perspective?
So maybe just I had a quick thought on the Africa comment. Yeah, I think we are seeing, I guess, new resources, but I would say while they're hard rock, not all of them are spodumene. So I think that you are seeing a lot of resources more on the lepidolite side in Africa, and obviously they have different supply chains. There's not as the converter market is not as deep, and there's also different waste and ESG issues coming out of that. So I agree with Ron that it likely takes a lot longer to bring some of those assets into production, if ever. And then, as far as overall investment support and government support for the sector, I think regardless of kind of the next administration, I think there's and kind of the potential for the Inflation Reduction Act to see changes or not. You are already seeing kind of big deflation across EV manufacturers. I think GM, Volkswagen, Tesla, they all want to have a $25,000 EV. So you are seeing that irrespective of subsidies, you're seeing the trend towards lower cars. Another kind of big, I think, item that could be big momentum wave for policy support in the U.S. Would be that all of the kind of key major battery plants, cathode plants, etc. They all happen to be in the southeast. So they're typically kind of more red-leaning states. So I think you could have a lot of support coming out of this region. And as far as Canada, you are seeing tax credits put in place for kind of smart manufacturing going into the electric vehicle era. You are seeing big government support for some of these latest battery plants. So Volkswagen is building their 90 gigawatt hour facility at St. Thomas in Ontario. Stellantis is also looking to build up their battery plant in Canada. So overall, I think North America is going to be a big winner for the next decade, if not two. We saw the big gigafactory announced in Nuevo León in Mexico. So I think we're very bullish on North America, and I think they'll all be winners as these supply chains continue to proliferate and regionalize.
Okay, I want to talk about. I think there's a consensus here that hard rock is rising, and we talked a bit about Africa just now. I want to talk about U.S., Canada, Brazil, Australia as hard rock jurisdictions. But before I do that, Daniel, I wanted to ask you, because like the last cycle, yes, and Joe's spoken about this, and it's true that there was a lot of hard rock supply that kind of came on, or like 5 mines came on in a short period of time in a market that wasn't that big. But in my interpretation, it was actually SQM being able to ramp up from 36,000 to 48,000, and then they ramped up to 150,000 tons. I don't know by now, right? Faster than some of us thought was possible. I mean, maybe a bit slower than they said it would happen, but nevertheless, it's quite impressive, Daniel. We talked about this, that they went from 50,000 to 150,000 within just a couple of years. And, so why is that, right? Apart from their concession incentivized that, like when they renegotiated their concession in 2018, Corfo basically said you have until 2030, but you are able to produce, I think, up to 216,000, tons. And then they put in the royalty regime. So they incentivize them to ramp up production as fast as possible. And they've been moving in that direction. But now there's some, so if you could just talk to what's the current situation and the negotiations and the like, and not in so much detail. I'd encourage you to listen to Joe's podcast with you, Daniel, where you go into this in kind of greater detail. But, is there some risk that SQM could, if the political dynamic was such to aggressively incentivize a significant increase in production, could they do it? right? Or was this kind of like a one-off, this 50 to 150,000 tons based on the existing pond structure, and the like? Is SQM a risk to supply, like all of a sudden, massive increase in supply if the political backdrop enabled it?
Yes, I mean, I think SQM will be ramping up production. SQM has announced in total 240,000 tons that they will probably achieve in terms of capacity by next year, 2024. So this means that SQM will have gone from 50 to 240 in a period of 4 or 5 years. Why was SQM capable of doing this? Well, essentially because the concentration stage, which is the more uncertain one, that SQM has an extremely good understanding of the hydrogeology of the Salar de Atacama, and basically what SQM has been doing is reducing the production of potash in favor of the production of lithium. So it's not that it didn't need to have more evaporation ponds or more concentration area. It's simply shifted the type of brine it is feeding into the ponds, and that produced this, enabled this increase of production. And as I said, I think they're going to reach 240,000 tons. The challenge for SQM was really only to build the refining capacity, which since it's a modular system, the process is well understood, is of relatively low risk. And probably the biggest challenge there is permitting, as Chile has become very complex on the permitting side. Now, looking at currently what is happening with the conversations with Codelco, with Corfo, I think there is a possibility that SQM and Codelco reach some type of agreement which could increase the production quota of SQM. SQM today is limited essentially by the total production quota it has through 2030. If that quota is lifted, well, I think there is also space for incremental production beyond the 240,000 tons.
Let's look at the different context of that, though. First of all, SQM was stuck on 50,000 for 3 years. So if you take the front end of that, it was the big increase was really over 7 years, not over 5. But even if they go to 240,000 in a couple of years, that's just 1 year's growth. So the ability of one company to kind of swamp the market is different. And I'm not taking anything away from SQM. I think what they've accomplished is impressive. But I guess the question I would ask Daniel to take it a step further is, what's the max, given the hydrology of Atacama, what's the max you think they could do in 2030 if they had no constraints other than the physical ones that exist in that salar?
Joe, it is very responsible what I'm going to say, because you really need to have a good hydrogeological data and also understanding of the composition of the brines. But in our forecasting here, since we don't have that information, we're using numbers between 300 and 350,000 in that hypothetical scenario that an agreement with Codelco is reached. Sorry, but I must be clear. I don't have any data supporting 300 or 350 besides my intuition of thinking, well, potash production can be further reduced. But I think SQM will eventually disclose that. So it's a matter of time only. Now, I totally agree with you. Whatever SQM can do is a drop in the pond when we look at the global context of lithium demand and how the world is going to supply all the lithium which is required. What for me is a given is that if Albemarle's forecast is correct, of estimating a global demand of 3.7 million tons by 2030, there's no way the world is going to be able to supply that lithium.
Yeah, and SQM goes below 10%, even if they could go to 360 in that scenario in 2030. So exactly. The point being, we need everything SQM can do, and hopefully they do it quickly.
Okay, great. Again, before we go into this hard rock, and we're all bulls here, but Rodney, you've and Joe, you've publicly kind of taken issue with some of the big banks, who publish the research, like Goldman, or I don't know who I think Goldman's been the more aggressive bear of late. I don't know who else have been bears, but could you just like sum up what their fundamental, arguments are and
I'd say, I mean, Howard, if I were to sum up the biggest beef, when you look at someone like Goldman's numbers, their numbers are actually similar to mine. The problem is they assume literally all supply is battery grade, and that's just not possible, especially new stuff coming online, and we've seen how long it takes to ramp. So in a market like, if you're in a low growth sort of GDP related business, that's one thing. But when you're in a business like lithium, where the demand growth is compounding at 25% a year, being out by 6 months or a year in qualifying means a whole lot more of a shortage. So to my mind, that's probably one of the biggest issues I have is the reality is the market is always behind in terms of commercial production, qualifications, and everything going through. The other thing that they have very low inventory numbers, which doesn't make sense, because if people keep a static months of inventory and the market's growing at 25% a year, then it makes sense that you would hold more inventory across the entire supply chain to keep your levels up to a certain number of weeks or months. And then lastly is scrappage. There are a lot of new battery plants coming online, and typically they tend to have higher production scrappage when they start. And again, that can't just loop back into the supply chain as quickly as people think it can. So those are probably my biggest beefs. And when you adjust for that, you often see that the swing is from oversupply to undersupply.
Joe, do you have anything to add?
Well, no, I think Rodney hit all the key points on the head. The comment I would make is that they seem to underestimate the top of the cost curve as well. And if you look at Morgan Stanley, and when I did my presentation in Singapore in April at Tribeca, that was what my complaint was, that Morgan Stanley shows a bigger supply gap than I do in 2030, but they have the price of lithium carbonate at less than $10,000 a ton. And that makes absolutely no sense given what the cost curve is to get to that kind of supply.
Joe hit a great point there. So the other thing I picked up in the Goldman's was they are assuming in 2024 that spodumene, I think, will be about $1,000 a ton. So it's going to go from 4 to 1, and that's how the top end of the cost curve can drop down to the number they had it at. So if spodumene doesn't drop by 75% from where we are now, then the numbers just aren't possible. And the other thing is lepidolite. We saw it give way at much higher prices than where they're projecting the price. So I can't see how that would be the case. If they stop producing at 25, how are they going to be doubling production in a whatever a $12,000 market? It doesn't make sense.
Yeah, if the converter cost curve goes down because spodumene somehow magically dropped to 1,000, then what you're looking at is the lepidolite curve, which I think if you're going to take Goldman's amount of lepidolite in their forecast is closer to 30,000 a ton than it is to 15. And people can debate that. But I think the example you just gave bears witness to the fact that if they're exiting at that price level now, why is it going to be any different in 2 years?
So lepidolite, Rodney, you said you can't have it both ways, right? You can't have all the supply coming, and if the cost curve for lepidolite is 30,000, you can't have lithium at 15,000, right? And all that lepidolite supply come on, because it just wouldn't make any money. But Ron Mitchell, you were talking about you have a lot of experience selling into China, Talison, and I mean, what's your sense from an environmental point of view, of what's happening lepidolite wise?
Yeah,
Some comments.
yeah, absolutely. Elephant in the room, Howard. No one's talking about it, and I'm quite frankly shocked by it because you're selling a material that's got if you're lucky, 0.4% lithium. That means you're shipping, producing 99.6% waste. And the problem with lepidolite, there's some radioactive isotopes in this material. And when you react it with sulfuric acid, it produces some really, really nasty elements. It's not like spodumene conversion. Spodumene, it's proven, it's in terms of the residue, it can be applied in a whole raft of downstream industries. These have been born and developed in China over multiple decades. I'm talking about construction, the cement, the brick industries, where the residue, so effectively the aluminosilicate, which is slowly aciditized, that material has a home, and typically the converters can sell this material. It doesn't have a high value. It might be selling for somewhere around 10 RMB, so a handful of dollars, but it has an end use. The problem with lepidolite conversion, it doesn't. And, gone are the days in China where you could just, act, in a very undisciplined manner with regards to the environment. Things are changing. The emergence of the middle class in China, particularly during the COVID lockdown, has transformed that country. And, we've got a team of probably one of the few lithium companies that's actually gone into China since it's reopened earlier this year. And that was a really serious conversation we had. Our team sort of uncovered was there's just mounds and mounds of this lepidolite residue lying around the place, and what to do with it? You can't landfill it. It doesn't have an end use. So where is that material going to end up? And Goldman forecasting 440,000 tons on an LCE base of lepidolite production. Seriously, do you know how much waste that is? So a massive disconnect, and not only commercially, technically, and now environmentally. So I would really encourage your listeners, Howard and Joe, to start asking these hard questions when it comes to lepidolite production, because, and as we've seen quite clearly, it just doesn't compete. Pricing moves sort of below 35,000 US a ton on the chemical side. Lepidolite's out of the market.
A question: who is buying lepidolite chemicals or chemicals made from lepidolite? I mean, I'm assuming CATL is a major purchaser, but does anyone know who they are and which batteries? Who are the end consumers of that? Right, like so. There's a question mark. Like, is Tesla buying CATL batteries? That are using environmentally unfriendly lepidolite? Does anybody know?
I would say unlikely. If they're doing their due diligence, as all major tier one buyers should be doing, they'd be going right back to the mine and the origination of the lithium molecule. And I'd say it's the same for the Japanese and the Koreans. So my suspicion would it, possibly CATL, but a handful of sort of the lower tiered Chinese battery entities would most likely be using that material.
And Howard, if I could, on the comment of maybe some of the viewpoints from the sell side community, I think they might be also underestimating the demand side for now. And I think the Tesla and BYD numbers are a great example of just, I guess, how resilient demand has been despite kind of the macroeconomic uncertainty. And I think some of the data out of China has also made it harder to realize that the auto sector is still quite robust. So if you kind of look underneath the kind of production and sales numbers, in May, for example, the property sector was down 15%, whereas auto was up 25%. But because property is just such a larger share of the economy, it tends to obfuscate some of the data on a macro basis coming out of China. But looking at kind of year-to-date sales trends, China's still running up 40% plus year-to-date. And I think some of the EV forecasts now, some of the sell side has up 15, up 20 for 2023. So I think some of the demand numbers I've seen have been on the lower side, especially if you mark to market. The demand's likely to beat some of the expectations out there. Obviously, we still have the second half of the year still to go, but to our earlier point, the second half of the year is usually the strongest anyways from an EV seasonality perspective. So I think there are some additional tailwinds. And I think for one of the banks I was looking at, that they have 21% demand growth and they have supply growth at 31%. So even if you were just to market to what demand's been doing, that essentially takes away all of their surplus. So I think demand upgrades over the next 3 to 6 months could also be a big catalyst to, look at the supply-demand picture for some of the banks and institutions out there.
So there seems to be a consensus that hard rock is a place to be, or that will continue. We talked about Africa, so there's the U.S., there's Canada, there's Brazil, and there's Australia. And the U.S. is, when I say hard rock, I'm talking about like spodumene, and let's keep it to spodumene. The U.S. is really, I don't know, it's Kings Mountain, Albemarle, it's Piedmont. I know there's some exploration plays in kind of the Dakotas that are, I don't know too much about it. I don't want to talk too much, in that now, but, Canada certainly has seen a lot of what we're calling these Crocodile Dundee Australians. And there have been some very significant discoveries and good price performance. And, Ford just did a deal with Nemaska, and Livent is merging with Allchem. So there's a lot happening in Canada, but Brazil has definitely, kind of come to the fore, as well. And don't forget Australia. And Ron, you just made an investment in Australia, and then this, I forget the name of the company, Develop Global, that you just said, Ernie, together with Minres, I guess is taking over, Essential Minerals. So if we could just all of you chime in, what your thoughts are on each of these geographies. Joe, I know you've been relatively bearish on Canada for some time. I don't know your thoughts today, but, we have Sayona and Piedmont are producing, we'll have first kind of shipment, and there are real investments being made there. But then on the flip side, you have Brazil and Sigma. I want to actually, is Sigma's like battery grade lithium concentrate, special relative to the spodumene that's in Canada, the U.S., and Australia?
Battery grade happens at chemical conversion. That's just a fact. You can have better quality spodumene, but battery quality chemicals are a function of the chemical conversion process. So that's my statement on that. I'm not going to debate. I'm not going to debate my friend Anna on that, but other people can weigh in as well. I'm not a bear on Canada, but I think Canada's record speaks for itself. And I think there's a lot of spodumene there. And I think we're living in a different world. Sayona was a dog that doesn't hunt in the old pricing world we lived in not too long ago. And now, it's fine. But that doesn't mean that Quebec is going to act any faster than it has in the past. That's what I think the real question mark is. I'm invested in Patriot. I'm invested in green technology metals. I believe the Aussies are going to be the key to unlocking what happens in Canada going forward. But I think it's going to take longer than people think, just because that's lithium. So I don't want to accept the mantle of a Canada bear. The other thing I would say on North America in general is, Jigger's got a lot of money to lend, but there hasn't not been one dime that has passed to a resource project in North America. Yeah, Ioneer's going to get one with a conditional. We all believe Thacker Pass will get one, but we're spending or allocating billions to battery capacity, and conversion's one thing, but you can't convert what you don't have, and that's a big issue. And we'll see how the politics play out on that. But North America is going to find itself continuing behind the curve, and they may have to depend on liquid spodumene from South America when it's all said and done.
Sounds good.
Ernie, do you want to? You have a royalty on Sigma, so I don't want to debate Anna or just I want to understand, right? Because the green lithium is there something special about Sigma's spodumene that warrants a premium compared to Ron's global lithium, which is going to use flotation, right? Is there any reason to or is Brazil risk different than Australia risk? I mean, like, what is? It's been very well marketed, and I think she's terrific. And I want Sigma to go at a very high price. Just an aside. I mean, we heard some rumors. If any of you guys care to share any rumors you heard at Fastmarkets, but I don't know how substantiated this is. But I heard things about like Volkswagen and Rio Tinto, maybe making a bid, and which could make sense to me. I thought Vale might be a good foray to kind of get into lithium, given it's Brazil. But, Volkswagen has talked about hard rock for a long time, and they've been very slow relative to kind of like GM and Tesla and Ford in actually doing anything. But yeah, Ernie, do you have any thoughts on quality of spodumene, DMS versus flotation? Is there anything particularly greener, more sustainable, therefore warranting some sort of premium, for that, or is that largely, good marketing?
Well, I think Joe, had a good point that a lot of kind of the battery grade specification and conversion happens at the converting site. But I think Sigma does have a lot of special attributes that make it warranting a premium price, which we've seen with the 9% tied to lithium hydroxide. The fact that they're being able to sell the tailings and kind of reduce the environmental footprint there, I think speaks to the high quality ESG effort that Anna and her team are moving forward with. I was also with Anna at COP27 last year in Egypt, and they had a great presentation and kind of key panelists from some of the mayors in the towns, and they've done a lot of microcredit to some of the women in the community during COVID. They were some of the key. One of the few companies in the region that were actually supplying food on a daily basis. So I think from an overall ESG standpoint, I would say Sigma's definitely probably the leader in the spodumene space. But I would agree with Joe that as far as kind of the battery grade, that's usually done at the converting site, and as far as once you get into a saleable spodumene concentrate, I think the converter essentially takes it from there. But to the broader Brazil question, we're incredibly bullish on Brazil. As you said, we have a 1% royalty on Sigma. We just did an investment with Atlas Lithium, a $20 million investment for a 3% royalty there. And if you kind of just add up all of the resources that have been announced to date between Sigma, CBL, AMG, Lithium Ionic, Latin Resources, you're already at 200 million tons, if not more, of mineral resources in Brazil. And there's a lot more exploration occurring on site. So I think Brazil is going to be a very, very large player in the spodumene market. The speed to market is also incredibly impressive. The fact that you can get to drilling within a few months is kind of eye-opening. So I would say, Brazil is going to be one of the key regions likely to supply kind of the North American and the European market, not to mention the Asian market as well. But I think it's going to be a big player going forward.
How do you view Brazil versus Canada? I know you've invested in Winsome and a few of the others. But what are it's harder to drill in Canada, right? You got to do it by helicopter. There's some infrastructure considerations. But how would you view Canada versus Brazil versus Australia?
Good question. As far as Brazil, I think the key things that we've noticed is that all of these projects, or the majority of these projects, tend to be coarse-grained, higher-grade assets. So the key kind of differentiating factor we've seen for Brazilian projects tends to be kind of just depth of the resource, but pretty much all of them are coarse-grained and high-grade. When you look at some of the Quebec projects, it's probably a lot more variety. Some do tend to be on the finer grain side. Some of them are coarse-grained, and you see mineralization kind of across the board. So I would say there's a whole host of varieties in the Quebec landscape. So I would say the due diligence is important in any event, but I would say especially in Quebec, not all of the deposits are created equal. I think we're very excited about our royalty on the Winsome Medina deposit. I think Canaccord this morning suggested that it could have a 40 million ton resource, according to Reg Spencer there. So I would say, yeah, that there's a lot more variety as far as grades, coarseness versus fines, depth in Quebec. And to your point, the infrastructure and the ability to work in some of these projects is perhaps more limited to certain seasons, whereas Brazil, you can pretty much work year round and make a lot of progress.
So you think supply from Brazil is going to come on faster than from Canada?
I think it's more project by project dependent. I would say on average, yes, just given that in some cases, Brazil, you can permit a project anywhere from 1 to 3 years. I think that does tend to be slightly faster than Quebec. But overall, I think it's going to be very asset dependent. And some of them are more advanced than others, like the Moblan asset, which we have a royalty on. The DFS is coming out this year, so it's definitely more on the advanced side. But yeah, I would say on average, Brazil is a jurisdiction where things can happen quite fast.
Okay, and Ron, you just made, again, an acquisition in Australia, unlike your Australian peers who have been all over Canada, and you work for Talazin. So to the two comments of like, is Sigma's green lithium, greener than, green bushes, or Mana or Marble Bar? That's one question. And then secondly, there is, and Joe has had this on the podcast, the thought of peak spodumene in Australia or what can Australia do?
Yep.
You have the Australians kind of coming out of Australia into other jurisdictions because there's a sense that it may be, picked over. So on those two comments, what do you think?
Yeah.
Sense of Australia.
I guess, look, well, naturally, the big advantage of Australia, of course, is we've done it before. We've got the runs on the board, the infrastructure's here, and most importantly, and no one's really talked about it, but we've got a market on our doorstep. So it's one thing having a spodumene raw material asset and being able to deliver that to market, but, whether you like it or not, China is where all the converting's taking place and will be for the foreseeable future. And yes, I acknowledge there's conversion capacity being constructed in other jurisdictions, but, for the next 2 years, it's a China story, whether you like it or not. So that for us is really appealing. We know China, we can get our material into China within 2 weeks, vessels leaving Mayport, Western Australia, into Mayport, China for conversion. We've seen the Chinese very, very active in this space. Clearly, most Australian producers are looking for greater global diversification in terms of that conversion piece, and that will come, but it won't happen overnight. And I know through my own experiences, working at Tianqi and the Kwinana plant, and we've heard, public information around the progress at Kemerton. I mean, these complex lithium hydroxide conversion plants, that is a real bottleneck. And that's where I think, again, the market's probably overestimating how quickly some of these plants can fire up and be constructed. So big challenge, chicken or the egg, really, in the Americas at the moment. You can build all the spodumene beneficiation you like, but where are you going to send it? So that for us is really appealing. We like Western Australia because we've got a massive market on our doorstep and one that we can profit from and monetize in terms of our assets.
Ron, if you allow me to jump in on this, I would say the other thing which Australia has is the know-how. Spodumene, concentrating spodumene, that know-how is in Australia. The whole ecosystem around it in terms of consulting firms, consultants, engineering firms, mining engineers specialized on this with experience, practical experience. That's in Australia. Nowhere else yet. So I mean, that also makes Australia probably also a more likely jurisdiction to be successful in deploying projects. No?
It's a good point, Daniel, and we haven't talked about it, but the West Farmers, covalent, right, is SQM, and then SQM followed that with an investment in Azure, right? So SQM hasn't gone anywhere but Australia for their hard rock.
Yeah, and Albemarle appears to be doing the same, although, yeah, they've not gone into Canada, they've not gone to Brazil.
It's very interesting. Why hasn't SQM or Albemarle, put in a bid for Sigma or been involved in anything else in Brazil? I know for a fact that they're talking aggressively to them from our Fastmarkets conversation. All the Brazilian ones. I don't get a sense. I mean, Livent's very obviously active in Canada, but we haven't seen SQM or Albemarle show up there in anywhere. So, Australia definitely has the infrastructure, definitely has the close proximity to where the market is today. And it's quite amazing. Albemarle has bid $3.5 billion for Liontown. That's like 15% of its market cap in cash. Ernie, what do you think about that? Like, just when you were at Tide Point, you were a big shareholder in SQM and Albemarle, and back in those days, Albemarle was like the lithium proxy. The price just kept going up and up and up, and like Albemarle today is only like 26, 27 billion market cap. The valuation, you've seen a very significant de-rating in multiple, but the profitability is coming through. The margins have never been higher. The growth prospects have never been, more real. Why do you think valuations are so low? Not just for Albemarle, but or there's a dichotomy, but they're willing to pay $3.5 billion in cash when their own equity valuation, based on EV to EBITDA is lower than it's been, I think, in ever.
Good question. I mean, I think we were speaking to it earlier, but Albemarle's demand projections are for 3.7 million tons from 2030. I think the probably highest or one of the higher prognostications in the space, and that's probably a function of they probably have one of the best viewpoints as far as talking to everyone, visibility out there. So I think given that they are much higher demand expectations, probably it helps them have the visibility to underwrite such an investment. I think the other key aspect is that Albemarle has tended to prefer assets of extremely large scale, especially if we think back to their Wodgen acquisition when they made it when we were going into a bit of a down cycle. But now, as we've seen, it's probably worked out over a longer term horizon. So I would say it's kind of similar framework that no question that Kathleen Valley is a very large scale asset that is going to likely be very important. And to our earlier discussions on WA being a top mining jurisdictions, I think from a long term kind of perpetual ownership standpoint, I think it's a very attractive asset. And I think some of the banks were saying that the equity markets right now are underwriting lithium stocks with a long-term spodumene price of around $1,500 to $1,800 a ton. So you are starting to see kind of a dislocation. So to the extent that we stay higher for longer, which I think many of us on this Twitter space ascribe to, you'll likely see maybe some of the valuations improve, given that the long-term discounted price is still a fraction of the current market dynamics.
I want to just end on, Rodney had a question here: is how accurate is the futures curve? The CME has a flat curve around $58,000 a kilo out to 2025.
A ton. Or 58.
$58,000 a ton. What do you guys think is going to happen, to price in the next, 3, 6, 12 months, based on what your supply, just what you're seeing in the market demand wise, constraints wise? Because commodity equities follow commodity prices. Like I said, I've heard some traders, they're quite bullish into the Q3, Q4 timeframe. I'm curious, to say another thing. I remember Daniel and Ernie. I saw you, I think, in 2019 at the LME in London, and then I saw Daniel, in December at the Deutsche conference, and prices were like, I don't know, in the single digits, the single thousands. But someone asked where would price be the next year, and everyone was bearish. except you, Ernie, at the LME. I remember like, oh, no, I'll make a bet that it'll be higher. Most people thought it would be flat or lower from the 10,000. So I'm going to ask a similar question to that. Where are we actually today? I haven't actually checked. And where do you think we'll be? Start with you, Daniel.
I think the market will be tight with eventually, or maybe most likely towards 25, even a significant deficit of lithium. And for this reason, prices will be above marginal cost of production, which is this $30, $35 you have of lepidolite in China. And if I would have to bet, I think the next 2 years, so 23 and 24, we'll probably see prices in the ranges of $40, $50. But then in 25 and 26, I would see those prices going slightly higher. Now, this is only sentiment. There's nobody that I know who can tell you the equilibrium price is 45, 52, or 69, or even 80 or 100. The general tightness, I think, will be there, and where that price ends up settling will be somewhere where the highest willing to pay buyer will be the level he will set. But in general, I see the market tight and getting tighter towards 25, 26.
Okay. Rodney?
Yeah, look, I mean, it's a very difficult thing to call to exactness. I agree with Daniel. I think that, the part of the problem that we also see is that chemical producers in China, when the price is running up, they hold back volumes, and when the price is running down, they dump. So you get these sort of more aggressive swings, especially from balance sheet light players that are over there. So, the futures curve is 58 out to mid 2025, which is an interesting one. It goes up from now and then kind of stays flat. I think, around, probably around the 40 to 55 range until we see a bigger shortage if the market pushes. But, as we've seen from this year, the mid and the downstream can play games in terms of how much inventory they hold and how they sort of play it along. But projects always have a way of disappointing in terms of timelines. So I think that, I don't know if that's a cop-out, but I'd say probably slightly higher than Daniel is possible. So maybe widen that band a bit until mid-decade.
Okay. And Ron Mitchell, I mean, at Taliesin, you must have been doing this analysis all the time. I'm sure you're still at Global Lithium.
That's right. I've still got my own personal S&D model that I interrogate on a quarterly basis, Howard. Yeah, look, I obviously am involved with the LME as well, and a lot of the futures and lithium traders. And the view out to Q4 next year is sort of, as Rodney was saying, sort of high 50s on an LCE basis. So that puts spodumene at somewhere between 4,000 and 5,000 a ton USD on an FOB basis. I don't think prices are going sort of south of 30 anytime soon. So I'd probably be sitting in that range. Longer term, look, I obviously see prices moderating, but I can't see LCE prices coming below sort of 25 to 35 on a long-term average basis. And that really positions spodumene on a long-term average of about 2,500 a ton based on my internal reckoning and analysis on a best-case scenario around the supply side. And I'm a realist. So stronger for longer as an overall sentiment.
All right. So, Ernie, we'll just end on you. Do you think the market are pricing lithium equities with, an expectation of $50,000 a ton with a floor of maybe 25 to 30 long term?
I don't. I think, some of the mark-to-market accounting I was seeing that we were doing, and also published by other banks and institutions, I think the market was pricing in somewhere around $1,500 to $1,800 a ton spodumene long term and kind of low 20s for carbonate. So I think to the extent that we stay higher for longer, even just in 2023, could be a catalyst kind of for outperformance in the sector. And yeah, I would probably agree with Rodney and I guess the whole panel that I do see prices kind of staying in the maybe 40 to 50,000 kind of range for the next couple of years, and at that point, then obviously visibility is not as robust. But I do subscribe to that tighter for longer narrative.
And I want to speak for Joe Lowry, but I know his price forecasts are not too dissimilar from what everybody here has spoken. So we're all bulls, but we're all experienced bulls. Like the analysts at the investment banks that have much bigger voices. I always say like little lithium, the punches above its weight. With having a lot of banks, big mouths, for little lithium, without like a lot of great analysis, behind it. But it spooks the market. And just kind of like Tesla, there was a lot of fear, uncertainty, and doubt of Tesla for a very long period of time. But, then it went parabolic, or the market is not pricing in what the consensus of five people who have been doing this for a very long time, are saying. So anyone listening here, none of this is financial advice, but if lithium equities are at deeply discounted valuations relative to the past, and prices are going to be a lot higher in the near term and the medium term than they have in the past, and the potential of the producers to make software-like margins like you're seeing at Pilbara, for many more companies, is great, and M&A is going to have to continue. There's not that many very advanced projects. We could point to Ron Mitchell and Rodney have collectively kind of put together. There's only 14 JORC resources, in Australia. There are JORC resources in some other places, but there's going to be a lot of M&A. There's a lot of meetings that we talked about at the Fastmarkets Conference, intra-lithium and also outside of lithium, whether it be oil companies, whether it be auto OEMs. So the first half, I think I tweeted a day or two ago, because this article in the New York Times about, lithium scarcity is attracting, a Fordlandia, back to the early 2020s in the Model T, where Ford bought rubber plantations and iron mines. You're starting to see that with GM and Lithium Americas, LG and Piedmont, and there's more Ford, with Nemaska, and there's more. So just, it's my prediction that you're going to see a lot more of that. And, I always harken back to the super cycle back in the 2000s. And I remember that Rio Tinto bought Alcan at a very high price, and they've had PTSD since then. That's why you've seen such tepid behavior from the Rios and the BHPs of the world. But, Rio bought Alcan for $35 billion. I could see, a world in which like Rio Tinto buys Albemarle, in 3 or 4 years' time, for $100 billion. And that's kind of like the top of the market kind of signal that I'm looking for. But in the meantime, the next few years, I think there's a lot of opportunity on the scoreboard. But to Rodney's point, maybe 25% of them will succeed. So there's a lot of stocks that are down a lot, on the scoreboard, and that will continue over the next, number of years. So be selective, be careful who you listen to. I think Rodney and I are very focused on creating content with high integrity, high quality people representing good assets. And, I think this group of people is probably a lot smarter and making a lot more accurate analysis than a lot of the bigger banks who have bigger voices. So thanks for following us. Thanks for listening in. Thanks again to Ron Mitchell, Rodney, Daniel Jiminez, Joe Lowry, and Ernie Ortiz. Take care, guys. Happy 4th Declaration of Independence.